Hey, what's up everybody, it's Rohit. Before you can get to $1 million or invest $250,000, you must first get to $100,000. Even though $100,000 doesn't purchase the same amount of stuff as it did way back when, $100,000 is still a nice chunk of change. Let's go through how I'd invest $100,000 today. For background, I've been investing since 1996, worked in investment banking at Goldman Sachs and Credit Suisse from 1999 to 2012, got my MBA from Berkeley, and have written over 2,500 personal finance articles on Financial Samurai since I started this site in 2009. Altogether, I've got 8 figures invested. So, whether you're just starting out or you're a seasoned investor, I think there's something in this video for you. Let's get to it. First up, we got to talk about the S&P 500. I'm putting $30,000 here, but I'm not dumping it all at once. I'm talking dollar cost averaging, baby. The market goes up, the market goes down. It's like trying to time the perfect cup of coffee. You never know when it's going to be just right. That's why I'm buying the dips. Every time the market takes a tumble of 1% or more, I'm buying. We're talking $2,000, $3,000, maybe even $5,000 tranches depending on how juicy that dip looks. You see, by spreading out your investments, you're reducing your risk. It's like diversifying your breakfast. One day oatmeal, next day avocado toast, maybe even some leftover pizza on the weekend. You gotta keep things interesting, right? Now I know what you're thinking. Where's the fun in playing it safe? Well, let me tell you, there's nothing more exciting than watching your money grow steadily over time. It's like watching a tree you planted years ago finally bear fruit. You put in the work, you were patient, and now you're reaping the rewards. But remember folks, investing in the S&P 500 is a long-term game. This isn't about getting rich quick. This is about building wealth slowly and steadily over time. Think of it like building a house, brick by brick, layer by layer. It takes time, but in the end, you'll have something truly valuable. Next up, we're talking bonds, baby. And no, I'm not talking about James Bond, although he does seem to have a knack for attracting wealth. I'm talking treasury bonds, folks, the kind that make your grandma sleep soundly at night. With interest rates being what they are, we gotta take advantage. And right now, treasury bonds are looking pretty darn attractive. Think about it, a 4.3% yield for a 1-year treasury? That's like getting free money just for holding on to your cash. Now I know what you're thinking, bonds? That's about as exciting as watching paint dry. But trust me on this one, folks. Bonds are like the reliable friend who's always there for you no matter what. They might not be the life of the party, but they'll never let you down. And in this market, with inflation still lurking around like a party pooper, you need a safe haven for your cash. So I'm parking up to $35,000 in treasury bonds. That's right, $35,000 of pure unadulterated safety. It's like having a security guard for your money. They might not be flashy, but they get the job done. And in this crazy world, sometimes you just need a little peace of mind. Now let's spice things up a bit, shall we? It's time to talk about speculative investments. Because what's life without a little risk, right? For this part of the portfolio, we're allocating $20,000 to the wild west of investing. And believe me, things can get pretty wild. We're talking about individual stocks, folks. And not just any stocks. I'm talking about the kind that make your heart race and your palms sweat. Think high-growth tech, cutting-edge AI, and disruptive startups that are changing the world as we know it. Now, I'm not gonna lie, this is where things can get risky. But with great risk comes great reward, right? Of course, I'm not just throwing darts at a board here. I'm doing my research, analyzing trends, and looking for companies with solid fundamentals and a bright future. But let's be real, this is speculation, folks. And sometimes, you just gotta trust your gut. So, if you're not comfortable with a little risk, then maybe this part of the portfolio isn't for you. But if you're looking for the chance to hit it big, then this is where the magic happens. Alright, let's take a break from the excitement of the stock market and talk about something a little less glamorous but equally important, debt paydown. Look, I get it. Paying down debt isn't as sexy as buying a Tesla or investing in the next Amazon. But trust me, there's nothing more satisfying than knowing you're financially secure and in control of your finances. So for this part of our $100,000 investment strategy, we're allocating $5,000 to pay down debt. That's right, $5,000 less that you'll owe to the man. Now I know what you're thinking, $5,000? That's it? Well, hear me out. This is about more than just the amount of money, it's about the principle. By making a conscious decision to pay down your debt, you're sending a powerful message to yourself and to the universe. You're saying that you're committed to financial freedom, and that you're not going to let debt control your life. And let's be real, there's nothing more freeing than knowing you're not beholden to anyone. Alright, let's get back to investing in something a little more tangible, shall we? Something you can actually touch and feel, something like real estate, but not just any real estate, folks. We're talking about hospitality real estate. Think hotels, resorts, vacation rentals, the kind of places people flock to when they want to escape the daily grind. Now I know what you're thinking, the hospitality industry got hammered during the pandemic, and you're right, it did. But guess what? People are traveling again. In fact, travel demand is surging right now. And that means opportunity for savvy investors like us. So, for this part of our portfolio, we're allocating $10,000 to hospitality real estate. Now I'm not talking about going out and buying a hotel, I'm talking about investing in platforms that allow you to own a piece of these properties. Platforms like Fundrise, for example, allow you to invest in diversified portfolios of real estate assets, including hospitality properties. It's a great way to get exposure to this booming sector without having to put down a ton of cash or become a landlord. So that's how I'd invest $100,000 today. Remember, this is not investment advice, but a deep dive mental exercise on how to best allocate capital for potentially greater returns and more joy. Always do your own due diligence before investing any capital. By diversifying across different asset classes, we're setting ourselves up for long-term financial success. If you found this video helpful, make sure to like, subscribe, and hit the notification bell for more personal finance and investment tips. Thanks for watching.